President Trump remains steadfast in his commitment to tariffs. He views them as a necessary tool to protect American interests and address trade imbalances. However, this stance has not come without consequences. Global markets have reacted with volatility and unease. The stock market in particular has experienced significant swings. The S&P 500, a key indicator of market health, suffered its worst day of 2025 on March 10th, plummeting 2.7%. This downturn reflects growing concerns over the president's aggressive trade policies. Investors are apprehensive about the potential for a full-blown trade war. The uncertainty surrounding tariffs and their impact on corporate profits is fueling market anxiety. While some investors see this as a buying opportunity, many are proceeding with caution. The specter of a global recession, fueled by trade tensions, looms large. The president, however, remains defiant. He has dismissed market fluctuations as short-term adjustments. He argues that his tariffs are necessary to protect American jobs and industries from unfair foreign competition. He points to the tariffs imposed on Chinese goods as evidence of his commitment to rebalancing trade relations. Despite the president's assurances, market jitters persist. The uncertainty surrounding the future of global trade is weighing heavily on investor sentiment. Businesses are delaying investments and consumers are becoming more cautious with their spending. The economic outlook remains uncertain, with many fearing the worst is yet to come. Financial experts are increasingly concerned about the potential for a global recession. The International Monetary Fund, or IMF, has downgraded its global growth forecast for 2025, citing trade tensions as a primary factor. The IMF warns that escalating tariffs could disrupt global supply chains, increase prices for consumers, and dampen business investment. ECB, European Central Bank. President Christine Lagarde says Trump will trigger a global recession. The ECB has also revised its growth projections downwards, highlighting the risks posed by protectionist trade policies. The organization stresses the importance of international cooperation and open markets for sustained economic growth. Adding to the gloom, several leading investment banks have issued warnings about the rising risk of a recession. Goldman Sachs, for instance, has increased its probability of a U.S. recession in the next 12 months to 20%. The bank cites trade uncertainty, slowing global growth, and the Federal Reserve's interest rate policy as key factors. These concerns are not limited to Wall Street. Economists at major universities and think tanks are also sounding the alarm. They argue that the Trump administration's trade policies are creating a climate of uncertainty that is undermining business confidence and hindering investment. The consensus among experts is clear: the risk of a global recession is real and growing. President Trump's tariffs have not gone unanswered. The European Union, Canada, Mexico, and China have all retaliated with tariffs of their own, targeting key American exports. This tit-for-tat escalation of trade barriers has heightened fears of a global trade war. The EU in particular has emerged as a vocal critic of the Trump administration's trade policies. The bloc has imposed tariffs on a range of American goods, including bourbon, motorcycles, and orange juice. These tariffs are designed to pressure the U.S. to reconsider its protectionist measures. The EU argues that the U.S. tariffs violate international trade rules and are harmful to both economies. The bloc has filed a complaint with the World Trade Organization, or WTO, challenging the legality of the American tariffs. The WTO is currently reviewing the case. This trade dispute has strained relations between the U.S. and its European allies. The EU has accused the Trump administration of acting unilaterally and undermining the rules-based international trading system. The bloc has vowed to defend its interests and those of its member states. Section 4. Market mayhem, volatility, and investor sentiment. The uncertainty surrounding global trade has sent shockwaves through financial markets. Stock markets around the world have experienced heightened volatility, with sharp swings becoming increasingly common. Investors are grappling with the potential impact of tariffs on corporate profits, global growth, and inflation. The technology sector in particular has been hit hard. Many tech giants rely on global supply chains and generate a significant portion of their revenue from international markets. Tariffs and trade barriers threaten to disrupt these intricate networks and weigh on earnings. Despite the market turmoil, some investors see opportunity amidst the chaos. They view the current sell-off as overdone and believe that certain stocks are now undervalued. These bargain hunters are betting that the market will eventually stabilize and that companies with strong fundamentals will weather the storm. However, others remain cautious. They argue that the risks associated with a prolonged trade war are too great to ignore. They point to the potential for a global recession, rising inflation, and further market volatility as reasons to remain on the sidelines. The divergence in investor sentiment underscores the uncertainty that characterizes the current market environment. Section 5. Bitcoin beckons, a safe haven in turbulent times. As traditional markets reel from trade tensions and economic uncertainty, some investors are seeking refuge in alternative assets like Bitcoin. The cryptocurrency, known for its decentralized nature and limited supply, is gaining traction as a potential hedge against inflation and market volatility. Bitcoin, unlike traditional currencies, is not controlled by any government or financial institution. Its value is determined by supply and demand on cryptocurrency exchanges worldwide. This decentralized structure makes Bitcoin immune to the monetary policies of central banks and the whims of politicians. Proponents of Bitcoin argue that its limited supply, only 21 million Bitcoins will ever exist, makes it a valuable store of value, akin to digital gold. They believe that as fiat currencies lose purchasing power due to inflation, Bitcoin's scarcity will drive its value higher. Moreover, Bitcoin's decentralized nature makes it resistant to censorship and government interference. This characteristic has made it particularly appealing to investors in countries with unstable political systems or restrictive economic policies. As global uncertainty persists, Bitcoin's appeal as a safe haven asset is likely to grow. Section 6. The road ahead, uncertainty, looms large. The global economy stands at a crossroads. President Trump's unwavering stance on tariffs has ignited trade tensions with major trading partners, raising fears of a global recession. While the president defends his actions as necessary to protect American interests, the consequences of his policies are far-reaching and potentially devastating. Financial experts warn of the risks posed by escalating trade barriers. They argue that tariffs will disrupt global supply chains, increase costs for businesses and consumers, and dampen economic growth. The International Monetary Fund and the Organization for Economic Cooperation and Development have both downgraded their global growth forecasts, citing trade tensions as a primary concern. The path forward remains uncertain. If President Trump continues his aggressive trade policies, the global economy could spiral into a recession with dire consequences for businesses and workers worldwide. Conversely, if cooler heads prevail and a negotiated solution can be found, the damage can be contained, and the global economy can resume its growth trajectory. The stakes are high and the world is watching anxiously. The coming months will be crucial in determining whether President Trump's tariff tango leads to economic prosperity or financial ruin. Please like, subscribe, and share this video.